Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is March 20th, 2018, and today is Tuesday morning. So looking at the economic events of the day, earlier today out of Australia, we had a monetary policy that came out. We'll take a look at the Aussie dollar. And then later today, yearly CPI number coming out of United Kingdom. Now that's an important inflationary number that's coming out, so we'll take a look at that as well. And then just keep in mind that G20 meetings this week, okay? So all day, it's going to happen throughout the day, and all Forex symbols are affected by it. And just keep aware that generally in these type of events, it's either lighter volume or more choppiness in the market. So just be aware of it. Might want to trade a little bit lighter than you normally do. But let's take a look at what's been happening in the market. So we're jumping here into the Euro USD and we're looking at a daily chart. And as you can see, we've been in a larger range and a shorter range, okay? A larger range between 122, 187, as you can see at the bottom range, okay, about right here. And then on the top range, 125-ish level, okay? We're right now smack in the middle of it, okay? So really nothing to write home about, okay? This is really something that, is indicative of such a market after we've had a massive rally. We generally just trade in a range, and we're right smack in the middle of it. So there's not a high probability trade right now to jump into the Euro USD. But looking at the 4-hour chart, if you want to trade a little bit lighter, we had a nice rally yesterday because we hit this 122.70-ish level. We broke this 122.85-ish support, but we rallied right back and we're settling here at 123.30-ish level. So again, nothing to really write home about, but this may play catch up to where the GBP USD is trading. And looking at the GBP USD, we broke our downtrend. Okay, we had a nice downtrend that we've set up if you look at the daily chart, and we broke it yesterday. Okay, now looking at the break, we're trading at 140.37. Now 140 is an important psychological number. It is a round number. As long as we keep above it, I think we can continue rallying. And I'm not just going to say that we're going to hit 143 right away, but that's something that we might want to consider as we enter a new trading range. Okay, so we've set ourselves up in a new upwards trend, okay, as we've broken this downtrend, and now we're thinking, more long side. Okay, so I'm not convinced yet. I'd like to see a little bit of a continued breakout for it to be confirmed, but we are looking and reconsidering if it's going to be breaking out on the upside. Now looking at the USD ZAR, getting weaker versus the dollar, hit above 12. Okay, we rallied all the way up to 12.16, and now we're selling off a little bit. So I think we're going to still continue to trade within this range. Okay, it's just a matter of which upper limit is, which is the lower limit of this range. To say that we're going back to 1176, maybe not, but we may find ourselves trading between the 1230, 13-ish level and 12 as we consider continuing this quarter in trading. Now remember, the ANC was a big factor into the political confidence into the South African economy, and now I think the dust is settling. Now look, we're looking at the Aussie USD, and as you can see, we sold off quite sharply from our 78 versus the dollar down to 77, got a lot weaker, and this was usually the one that usually rallied the market versus the dollar. So the Aussie getting much weaker versus the dollar. As you can see, we hit a high of 78-ish level and we didn't break it, and now we nosedive down to 77. At this stage, we may bounce off of this range, okay, because previously we did have a resistance level at this area, so that might be something to look at as today continues trading. Now oil's been quite quiet, but gold's been kind of quiet, but we're looking at oil right now, and we broke this wedge formation on the upside. Okay, we mentioned this earlier this week that we were making this wedge formation, and sure enough, we broke it on the upside instead of the downside, and we're trading at 62.71. So you could now consider 60, 78-ish level, 61-ish level to be a considerable support level for the price of the barrel of oil. Okay, we're trading at 62.71-ish level, just midpoint between our upper range and our lower range. So again, until we get some sort of confirmation on the upside, I don't want to just celebrate it. Looking at the Canadian dollar, versus the USD, you can see here that we've gotten a lot weaker versus the dollar. Okay, now the dollar's been rallying versus the Canadian dollar from 122-ish level to 130, and that's kind of a surprising situation because Canada, much of its economy is based on the oil. Oil has been getting stronger, and you would have thought that the Canadian dollar would have gotten stronger, but sure enough, it hasn't. It's gotten weaker versus the dollar. So it's a little bit of a surprise here onto the relationship between the Canadian dollar and oil, that it's getting weaker. So, ultimately this can continue rallying, okay, because it's trending upwards. There's nothing really stopping it. So if you do get a chance to, break in, okay, at the next pullback, 129, maybe 130-ish level, okay, might be a decent place for it to actually enter. Now, looking at the Dow Jones, we are really choppy in this trading market, okay? We've been, you know, I can't stress this enough. It's been so volatile in the Dow Jones this past week that there's literally money being given away. Okay, even if there's no uh, trending line, but the moves intraday are 200 points up, 100 points down. Now it's been a little bit choppy just the last day, just because of this G20 meetings and lack of focus and lack of direction in the market. But I think this month we'll start getting our corporate earnings from companies that represent the Dow Jones, and if there is some more confidence in the market, we could see it definitely heading up higher. So keep an eye on that as this continues to trade, and we're just trading above this support level. I'm still biased on the upside. So, ultimately, if this does, close in on 25,000, I wouldn't be surprised as this continues rallying. This is Fred Razak. I want to wish you guys a great trading day.